Hello, James, and thank you so much for taking the time to join me on the podcast.
Of course, Nathan. Thanks for having me.
So, as always, we'll dive straight in by asking you the question: what's the wrong you want to right?
It's such a big question, and I think anyone who is curious and wants to see the world progress must have many different answers, and I have many different answers. But maybe at this very moment in time, my focus is just on all the cool things that's happening with crypto and blockchain technologies right now. And I'm just trying to help people understand it a bit better because it is a very complex technology. So through humor and through writing and maybe some memes, I try to kind of expose that to the world. That's very narrowly, and this I'm sure will pass because there's just so much stuff that's happening in the world that's interesting. But maybe zooming out more broadly, I mean, we live in absolutely the zenith of human civilization. I think there is it's obviously will be better tomorrow. Hopefully, we'll wake up tomorrow. Every new day is basically an all-time high for humanity, right? And there's just so much to be thrilled about. And honestly, if you peel the layers back and you ask why is it that what's the driving force of progress and why we're doing so well? I mean, if you had to boil it down to one word, it would be technology, right? And I feel like today while technology is diffused incredibly well, and we all have supercomputers in our pockets, the sentiment the sentiment of society as a and maybe media specifically toward technology has almost soured. Maybe I'm just too close to it, but I feel like it is now more fashionable to criticize, nitpick, and find like phantom narratives against technology than it is to kind of embrace it. And I find that a little bit regrettable because it's not a sign of I think some degree of skepticism and criticism and going through and inspecting it through kind of a few lenses is good. But now there are just I feel like this default criticism attitude that from especially large newspapers like the Guardian. I swear to God, if we cured
Mm.
cancer tomorrow, it would not be a glowing headline out of the Guardian. It would be something about access inequality. It would just completely miss the point entirely, and that has become more fashionable than just like accepting and celebrating human progress. And I think it would be great if humanity took a more positive, of course, healthy positive, not just blindly positive, but a celebrate what we've achieved like in this last century. I think it's absolutely incredible, and really have like a optimist and more excited view of the future of what we're building together because I think we're going to incredible places.
And what do you think, James? What do you think's behind this, as you say, growing trend of skepticism, it being fashionable to be more skeptical of something rather than positively embracing things? What's behind the trend?
Yeah, I think there are probably a few things. One is that big tech got big. I think is one aspect, right? And there's always this default. There's people have innate temperaments, and among those who are more egalitarian in streak, they will be more critical of call it larger and wealthier organizations, except if it's the government. That's okay. So once companies get big, they basically they enter focus for this style of criticism. 10 years ago, Facebook, Google, these even Microsoft, they were not so big. They were not trillion-dollar companies, right? So they were, and they didn't have so much power. So I don't think they attracted as much attention. A, they got big, and B, I mean, some real problems did start occurring on social media, right? Like
Mhm.
these companies grew as fast as possible, but embraced an attitude of human society and human actors are generally good people. We're generally going to assume good actors and good intentions. And I think around a few years ago, last kind of 2 election cycles ago, people figured out how to use these powerful social networks for malicious means, and that obviously caused significant damage and credibility to these companies, but it also gave the press some like for the first time like tangible narratives to say why big tech is bad. The other side, of course, to
Mm.
consider is that while large tech has been growing, their business success has been completely at the detriment of the traditional business of print media and now increasingly kind of TV. So I think it's impossible to say it would be far too naive to say that the fact that their businesses are crumbling, and every time I read an article from one of these newspapers, they're literally either asking me for donations or paywalling me or otherwise like struggling to kind of even be a viable entity. Like they can't be feeling good. If they were in a healthier state, maybe I think they would be less bitter and less divisive about this stuff. But I think the simultaneous factors of their business crumbling
Mm.
and large tech becoming essentially more influential than nation states is kind of causing this division. And of course, that's on the media side. If you look at what's happening with, there are individuals who feel this way too. Like part of the reason they write these articles is because they're readers who want to read this narrative. And I think at a very macroscopic scale, the effect of technology has been to magnify, call it outcome inequality for people in the world. I think you could, there's a great debate to be had about, is that the natural state of things or is that an artificial induced state of things? I tend to think that it's magnifying kind of underlying realities in the world that were masked by kind of the prior eras of kind of I guess society and economics. But that's a reasonable debate to be had. But I think the fact is, technology has allowed, call it the top 10% of people with skills, with high leverage skills, call it the top 10% of people there, to basically accumulate exponentially more wealth, while good, honest
Mm.
labor, which used to earn a good, honest living, has decayed because of globalization, automation, and all these other things. So that's magnified a huge gap that didn't exist 10, 20 years ago as much. And naturally, those who are on the wrong end of that bargain, they need a narrative to explain their outcomes because they're just simply unlucky relative to what's happening to the world. And I think it's understandable that they are kind of upset that the world is working against them in almost a secular way.
I mean, yeah, there's so much stuff to unpack here. I guess from your perspective, then that positive outlook. When you look ahead, what are the things which you are sort of most excited, feeling most positive about in terms of what's going to really change the world for the better?
Yeah, I covered artificial intelligence when I was an analyst at ARC, and it was I think I think probably of the technologies that are truly have that would truly have incredible impact over the next couple of years. I think AI, blockchains, and everything we're doing with kind of the kind of I guess digital medicine, thinking about like everything we did with our mRNAs, right? That converting, basically turning human biology into a digital problem. It's like I think that's these three areas are the most interesting. But it's funny because is almost AI magnifies the trend that we just talked about because it's going
Mm.
to give those with more capability, higher leverage. AI is an incredible magnifier of technology, right? AI has made large tech companies even larger. It's made $10 billion companies, $100 billion companies, $100 billion companies, $1 trillion companies, because you can now like with any social media application, Facebook, Instagram, Twitter. It used to be the case that they just served you whatever content your friend or the people you're following posted the last time since the last time you logged into the app. So I open the app in the morning. It basically shows what you posted, what John Smith posted. It just shows my 10 people what they posted. But because the internet exploded and now we follow 1,000 people, it can't even fit that on the timeline anymore. So companies basically replaced a very simple show last content algorithm with a neural network that selects most likely to engage content. So like it's gotten to the it's getting a little frustrating because sometimes I don't even see the things that I thought I would see. I follow people and I never see their stuff because it's
Yeah.
it's selected for me with a neural network. But the benefit of this is that well, the really interesting like thing about this is that what's actually happening is these products, which used to be like one product for everyone. If you think about cable TV or just any TV, right? Um, when I watch, I don't know, CNN, it's the same channel for everyone who watches CNN. If I listen to BBC Radio 6, it's the same program for everyone listening to Radio 6. But when people open Facebook or Twitter, it is a unique product for every user. Facebook is a product that generates 2 billion unique versions of itself for everyone on Earth. Instagram is a product that generates 1.5 billion versions of itself for everyone on Earth. So like it's these, and they're all powered by neural networks. So it's given this incredible scaling factor for big tech, but it doesn't really empower the individual in any genuine sense. It gives them more of what they want, but it doesn't give them more power and control over their lives. It almost gives them less, right? Because it's just now controlled by these black boxes. It's not like Facebook is trying to dupe you. They're just trying to literally give you what you want based on the signals you provide them. But the signals are very indirect, and you have no way of expressing yourself or taking back any control. So I think Peter Thiel made this point way back when, which is that like AI is almost like a authoritarian technology. It gives more power to the power structures, whereas blockchain technologies are more, I guess, pro freedom, which is to give more power to the individual. So, like to contrast that,
Mm.
for example, um, you know, when Bitcoin launched, Bitcoin today has made so many crypto billionaires. Ethereum has made so many crypto billionaires. And, I would have some friends who might ask, it's like, gosh, I wish like they, it didn't just, I wish they gave it to the people instead of just like, it just made a few people rich. And what's not so well known is that when these protocols launched, they were the most truly democratic and grassroots based ways of distributing. Even at the time, people didn't even know, but now we know capital of any system. Like anyone could just mine Bitcoin at the beginning and get tons of it. Like for the cost of running a fridge, if you started in the early days, you could be a multimillionaire just running it on your little computer. You don't even need specialized GPUs back then. So all it took was for buy-in at the beginning, and um, granted, you had to kind of like no one knew in advance it was going to be a success. So how could anyone really tell you? But for the people who participated early, it took no cost. It didn't require them to be a capitalist. It required a minimum amount of labor, and really it distributed $1 trillion of wealth to people in the world. $1 trillion out of nothing. So like it's a very empowering technology, and Bitcoin was the first to kind of launch and almost like distributed wealth with just almost like money falling out of the sky, but really money kind of spewing out of your computers. But there's since then been thousands of protocols or blockchains launched in the world, and a lot of them haven't done so well, but a lot of them have been extremely influential and genuinely useful. And I think one thing I'm trying to highlight these days is just blockchains, these crypto thingies, blockchains, whatever, tokens, are actually doing useful stuff. People may not have realized
Mm.
since the last round, which is like 2017.
Yeah, and as you say, it's some of that sort of cynicism and skepticism. Some of it seems to be driven by an almost annoyance that it's like, oh well, these people are getting rich off some sort of game or some sort of hack, or it's kind of unfair. It's like, but as you say, there's much deeper roots in this technology and the sort of, I guess, some of the philosophies behind it. I read a piece that you tweeted out recently, and one of the things you said was pay attention when stuff is really early or weird.
Yeah.
And I think you were kind of referring right to like when Bitcoin first launched. Can you talk a little bit about that? I guess it ties into what you're saying here about the very sort of early onset of this technology.
Yeah, I think one of the meta lessons that you can kind of take home from the last 2 decades in technology is that it pays to be early, and it pays to be it pays to be to notice things early, and it pays to be an optimist. It does not pay. um, I mean, actually, being a follower is not bad. Like, you could have bought Facebook at the IPO and you still would have done very well. So, like, but still, to many people at the time, that was a controversial decision. It's so obvious in hindsight, like, oh yeah, Facebook is like a blue chip tech stock and it trades at a low multiple. So of course it was going to do well. No, buying Facebook was extremely excruciating. Like in the first year, it fell a lot during the first year. So but the general lesson of the last, like, I don't know, 20 years is that it pays to be an optimist around technology. Even if you fell into even if you were duped, if you made 10 independent bets and you were duped on two of them, they were just like scams, like Theranos. You still would have came out way better than just being, for example, in the S&P 500, which is essentially a index of stuff that's happened in the past, right? Because it's weighed by how much you're worth. So being early, like for example, Bitcoin, the crypto kind of market goes through booms and bust cycles, and you might have heard of it in 2013. You might have heard of it in 2017. You might have heard in 2020. These are like kind of natural cycles in which they did well. But if you had paid attention, there were so many opportunities, and you could have been mining as early as 2012 or something. But like there were so many opportunities for you to take a point of view and to look into it, and to just chat to the people who are into it. I know so many people. I'm late. I was so late. Like my friends were mining Bitcoin. Like I didn't never mine Bitcoin. I had just heard about it through Chris Bernisky. We worked at ARC together. He started a crypto fund after that, but he was the one who got into it. And he's like, look at this Bitcoin thing. And at the time, I took this attitude that was very considered respectable and I don't know, correct among investors, which is you should only invest in things you know and understand, and generally, and of course, all investing, whether it's growth investing or value investing, is still value investing. You're trying to buy an asset at a price lower than its intrinsic value, and its intrinsic value is defined as the sum of all the cash flows it will produce in the future, presented in the terms of the present. And because Bitcoin doesn't produce any cash flows, it's not a business, right? It doesn't generate revenue. It's just this like this digital gold thingy. So you couldn't really value it using
Yeah.
The traditional CFA certified frameworks. So as a result, I was like, okay, I don't understand this technology, and I can't value it based on everything I've been taught. Like this is important. This is how you this is how you do adulting as an investor, right? So therefore, I should stay away from it. Right? It's so funny, but other people with different mental models came to different conclusions. So that was my initial kind of that was me. That was relatively early in today's terms, but it was not very optimistic in kind of outlook. But what turned me around was I went on a vacation with my parents in Sicily. I remember distinctively. I was just, thank God for Twitter and just broad cellular coverage. Even in the hills of Sicily, I had great reception. So I was just scrolling Twitter on the bus from Palermo to Catania, and it was beautiful mountains. Anyone who definitely check out Sicily. But I remember seeing some tweet to the effect of, things are complex. The world is a very, very chaotic place. You can't have all the information at your disposal. Don't have too high of an opinion of your own opinion and judgment. It was actually much more succinct than that, but basically it was to encourage you to be a bit more open-minded and not think that investing can be boiled down to this methodical process and of information analysis. And it just kind of turned me around, and I just basically instantly thought, you know what? You don't have to understand something fully before you invest. It's okay to not understand. Um, Taking the view of it's okay to not fully understand really liberated me. And by the time I got off the bus, I decided I was going to buy Bitcoin. That was the moment. That was the bus journey that paid for itself. That was in 2016.
No, that's interesting because me personally, like I feel super late to all of this. It's like I've been aware of what it is for so many years, but only in the last like few months have I started actually regularly buying some cryptocurrency.
Yeah.
But I got into a conversation with a friend on Friday um, who works for the Bank of England,
Yep.
uh, and the contrast between my view on what I was doing, like, oh, you know what, I'm just going to dive in, I'm just going to start buying some crypto. I think the technology is interesting. I think the potential is huge. Her take was the complete opposite. It was
Mhm.
like you're fueling all sorts of criminal activity. This is wildly unregulated. Like it's terrible. And the contrast between me and like you said there, I'm like, don't know really. I don't know all the detail. I know a minute level of detail, but I've decided to act on it.
Yeah.
Versus probably someone who knows a lot more of the detail and has come to a completely opposite conclusion. And I think it's that's kind of like, and it's been on my mind ever since. But I guess it kind of speaks to what we're saying.
Absolutely. Who was it? Oh God, great investor. Name's escaping me. Maybe it'll come back to me. He said like so many people are experts, but they're experts in past versions of the world. Your friend is an expert in the past version of the world, the version called the traditional financial system. She, along with many others, were sure given an excellent education and given a great kind of career track to understand the way things are supposed to be done. And if the world were not changing, they would be where you want to be because they are the established order. They are the Illuminati in plain sight. But because the world is changing, everything they know is almost like anti-knowledge, right? It's like knowing the scholastic philosophy system of the Middle Ages. Like, yes, you are the expert in that, but that will soon be irrelevant. So, and knowledge is kind of this kind of thing that has its own gravity. If you know this, it kind of completely warps your view of how you're able to absorb contra information, and and makes you worse at absorbing contra information. Whereas you have a beginner's mind. You don't have all the knowledge of the inner workings of the financial system and all the regulations that are in place and why they're in place. That gives you an advantage when it comes to new things. So like that's why I think you're able to take a more flexible, and a lot of this is temperament too. You know, a lot of the best crypto investors came out of the traditional world too, and I think this has to do with temperament. You are, you know, just more fluid in temperament, and you don't have all this prior knowledge that is actually baggage. So like you were able to jump in quicker, which is great.
That's interesting. Yeah, where it's beneficial to have less knowledge. That's quite interesting. I guess this contrast between is say the traditional way of doing things, the traditional way of investing, and where things are going when you look at crypto, like the volatility is something which people talk about a lot because it is crazy when you really look at it. Like, and I think it must put a lot of people off. How do you sort of process the sort of volatility that we see, and I guess why do we see so much volatility compared to other things when it comes to crypto?
I mean, volatility happens when stuff is early, when stuff is highly liquid, and when you attract a lot of speculative capital, when it's just highly, I guess, unregulated. It's because crypto exists in a complete parallel system to the traditional financial system, almost completely parallel. You need ways to take your cash, your fiat currency, and buy, you know, these cryptocurrencies, and that's still done through these centralized exchanges like Coinbase, which is listing today. Incredible
It is.
validation. Um, but after that point, it's essentially the wild, wild west. You can do anything you want. So once again, I think this is a temperament issue. It's funny. I have never thought about volatility in crypto. Like I never even think about it because um, I guess by I don't know, my brain just doesn't feel like that is a stress factor. But I can certainly understand to other people who's different temperaments that would be a stress factor. And I certainly know people who literally won't buy it because including who was it? Nassim Taleb recently, right? He basically sold out his entire Bitcoin position because he thought it changed its value too much. And I don't know, him of all persons should understand this stuff. But to me, if you play the long game, you care less about the volatility in the short term. You don't care zero, but you care less.
Yeah.
B, by temperament, you may just have higher kind of tolerance for this kind of stuff. But overall, I would say that um, if you find it too volatile, I mean, I could tell you to take a long-term view, but I don't know if that will actually psychologically help you, because it's giving advice is useless because like it only runs it's software that works for your brain, but it doesn't port to someone else's brain. So it's almost kind of useless, but people give advice anyway. It's a great industry. But I don't know. I think a great product would be if someone would lock your crypto assets away for X years and buy a smart contract and you can't sell it. I think illiquidity is actually one of the best features of the venture capital industry is that it kind of just takes you out of the day to day. What's it worth? What's it trading at? And that actually helps you stay in the market and actually be the guy who's like, oh, I bought early and I still hold it. Like if you bought Amazon in 90, what was it, 7, 8 on the IPO, the chance that you still hold that stock today is practically 0%, right? Because
Mm.
it's gone through so many just gyrations and crash after 2000 and narrative problems and every day it gives you a reason to sell and you have to have like such iron conviction to hold it through all these cycles. But if it's illiquid, you just don't think about it because you don't have the choice. So I think if you're someone um, who would otherwise be so open to it and want to hold it, but just find the day to day too intolerable. It's so funny. Masayoshi-san, one of the greatest and highest risk tolerating investors of all time. SoftBank. He was at one point in 2000 richer than Bill Gates because of how much SoftBank was worth, and then got evaporated. But he literally bought Bitcoin on the
Yeah.
advice of a Fortress and he couldn't tolerate the volatility. He said, I kept checking the price every day and I got fed up with it. So I sold it all. He literally bought the top and sold the bottom in the last cycle. But yeah, I agree, this is a real problem. But if you can find some way to lock it up for yourself, for example, when you buy Bitcoin, you're given a private key. That's what gives you the unique access to your tokens. If you can just take that key, and put it in a safety deposit box or break it in half and give it to two friends you trust and say, do not, basically you lock it up for you. Do not give this back to me, no matter how hard I scream and shout and moan for 5 years. Like that would be one way to construct a mechanism for you to just take it out of your decision process. But I think this shows so strongly that like investing is at least 50% psychological, and for some asset classes, maybe 80% psychological. It's definitely that case.
Yeah, interesting. You obviously mentioned then the news today about Coinbase listing, and I guess it's a kind of a proof point, a small but significant proof point, I guess, that um, change is happening. I guess what do you see looking forwards to be the next major sort of proof points or the next major hurdles to be overcome for crypto to be a much more accepted part of the world? What do you see as those sort of, yeah, as I say, those hurdles or those milestones?
I think we still need a product that can reach, call it Facebook level penetration. Um, right now, there's no crypto product that someone is using, like in our immediate friends and family networks, right? Normal people are not using crypto. It's still the problem. And since the last kind of bull market in 2017, which generated a ton of capital through these ICOs, basically like token launches,
Hmm.
there's been incredible amount of just human capital and monetary capital trying to trying to help crypto find its product market fit for a genuine mainstream use case. And we didn't, and we never had it, I would say, until very recently. Um, I'm just finishing up a newsletter piece called like 5 genuinely useful things that crypto can now do in 2021, implied that it couldn't do before. And I think basically two broad categories have emerged that have now engage in, call it, normal people who are not interested in being a crypto guy, right, to actually use this. The first is NFTs, which kind of just basically made it possible to buy scarce digital goods. There was just no such category before. You had scarce, non-scarce, digital, analog. In this 2x2 matrix, scarce digital was not a category that existed before. Bitcoin was the first to fill that box, but it was also just a purely symbolic thing. It was this, just Satoshi. So people couldn't, it's not, if you believe it, it works. If you don't, it's just a random number you have in your random wallet. But NFTs, you could actually exchange, dollars you earned for creations that somebody made, and it's provably scarce and provably genuine. So that's the first. And like NBA Top Shots, just video clips, like there's already an established TAM of people into basketball, an already TAM of people established into collecting baseball cards, and now you can do that digitally. So that's the first natural use case that did not require reading essays and listening to podcasts. It was just like, yes, take my money, please, I want it. So that's the first category.
Yeah.
Second one is kind of just what's broadly called DeFi, or decentralized finance, which is basically you can do so many of the core functions that your bank provides on top of these blockchain protocols. The most obvious being just borrowing and lending. The fact that you can do that now, and I can kind of walk you through my experience of trying those things over the last month without interacting with the bank, is incredible. And your friend at Bank of England you should ask her about that.
Yeah. Yeah, I think let's dive into both of these two themes then. I guess starting with NFTs, again, it's like a mind-boggling thing to try and get your head around at first, but then
Yeah.
once you do understand, and I think that explaining it in that 2x2 matrix which you just talked about, it's kind of like, yeah, this does make complete sense. I guess what's your sort of best layman's terms explanation of NFTs and why they're going to become such an important thing?
Yeah, sure. Imagine it's the best way to think about NFTs is to put yourself in the shoes of a creator, of a artist. Just imagine you're a photographer. You're a reasonably well-known photographer, and currently your business is you take a beautiful picture of Yosemite or the Alps. You issue 100 prints. They're all worth $1,000 each. You price them $1,000 each. You put it on your web store, and you already have a reasonable reputation, so people buy it off you and you ship it to them for $1,000. That's the traditional business, but this is an analog business because you're issuing physical goods, and then you go to the post office and you ship it. Now we know that the digital economy is the fastest growing part, right? So like people are selling digital goods. So how can you as a photographer sell digital goods? If we're having this conversation prior to 2017, the answer is you can't. There's nothing the internet can do for this photographer other than provide a web end front, like a web store front end that kind of just gives presence. If you try to sell a digital copy of this photograph, how much can you sell it for? The answer is zero. Because why? Because the reason why it sells for zero is because literally, there's this joke in the NFT world: right click and save. Anyone can right click and save, and then this file has no has no provenance value. Like, let's say I'm this photographer, I upload this file on my website, and I say you can buy a digital version of this file, 10 megapixel version, for $1,000. The one person buys it, and somehow it gets leaked on a torrent or something. All the files are exactly the same. There's literally no difference from the person who paid $1,000 from the person who just like kind of found in some corner of the internet. You cannot prove you bought it. It's because part of the wonderful thing about digital is that cost of replication is free. So they're infinity copies, and anything that has infinity copies have zero value, whereas the analog prints are finite, so they have value. So the only way you could, so basically, from the photographer's perspective, there's no value capture mechanism on the internet. All you can do is sell online and ship physical bits. NFTs, the first kind of core standard for NFTs were invented on the Ethereum blockchain. It's called ERC 721 token. That came out in 2017. And it was basically a way of generating a little packet of code on top of the Ethereum blockchain, which is distributed across tens of thousands of computers across the world, that was provably scarce, so that these tokens could not be replicated because it was protected by cryptography. And these were non-fungible in the sense that each are different than the other. One Bitcoin is the same as any other Bitcoin. They're interchangeable, they're identical, they're fungible. But for things like content, they're actually, by definition, non-fungible, right? Because they're all different. So anyway, the core aspect is you can now create a digital bit that is provably unique and provably scarce. And this packet of code, the most important thing about this packet of code is it has a little signature that says where it came from. So if now let's imagine I'm this artist. The year is 2021. I hear about NFTs because I read about it. I'm like, cool, let me try this stuff. I can now take the same photograph. Look, let's say I took a new photograph. It's my latest work. I'm not even going to do analog prints. I'm just going to try this NFT business. I'm going to basically I scan this photograph, or it's digital anyway now, right? I have this photo, it's an original high resolution photo, and I mint an NFT. And what it does is it creates a unique signature for this NFT. And just like in my old business, I'm going to make 100 copies. So you basically, on these platforms, and these are just all drop down, click and drop platforms. Now you can say, I will make 100 units of this piece of artwork, and it doesn't create 100 copies of the JPEG. It actually creates 100 units of these ERC 721 tokens. So these little code snippets or smart contracts on Ethereum. But and then you can go on a website like Foundation or Nifty Gateway to sell your artwork. Now you price it at $1,000, just the same thing, right? And people will buy it now for $1,000. Why? Because they provably know that there are only 100 of these tokens, and you can copy the JPEGs, because the JPEGs are actually unprotected. It's just like sitting on Dropbox or something, right? You can copy the JPEGs, but you can't copy the tokens, because the tokens doesn't live on the internet. It lives on the Ethereum blockchain. And the Ethereum blockchain provides scarcity assurance and protection from tampering. So that assurance basically allows you to make a digital good that is scarce. That sounds in a way backward, because it's like, hey, a JPEG is like, digital stuff is supposed to be free and infinite. Why would you like walk backwards and make something that has more fluidity, more rigid? The benefit is just in the incentive structures and in how human psychology works. We will buy something that's scarce, but we will not buy something that's called infinitely abundant. So it actually creates an opportunity and creates a real business for and livelihood for the creator, and it allows a collector side kind of ecosystem to develop at the same time. So it actually benefits both sides. The important thing is no one is coerced to use this technology. So if you think this is a bunch of nonsense, you don't have to participate. But I think golf is nonsense. I don't play golf, right? But for the people who do like it, it's like the artist now has a way of making a living on the internet, which, are we going to say that's bad? And collectors now can pay patronage to the artist. Are we going to say that's bad? Like, it is literally a win-win situation. And the only way you can screw it up is by like nitpicking and then finding some nonsense environmental narrative and then making the focus of your column and then printing it in the Guardian. That is literally the only way you can screw it up. And of course, that's the angle that some people choose to take.
Yeah. I mean, it's like the music industry is a really interesting example in this as well. And for so many years, you've read so much about, oh, well, I've had 1 million streams on Spotify, but each stream only pays a fraction of a penny or a cent. And where do you think the development with NFTs will leave the sort of the I guess the established players in the distribution of this digital content, be it a record label or otherwise? Where does it go for them?
I think, if you look at what the internet has done for media in general, um, the internet has made certain livelihoods much better or much worse. For call it content create for people working in content, whether it's writing or music or digital media, like in the form of images and video, I'd say for a lot of for anyone who had an existing reputation or existing business model, it's made it worse. Like the music industry collapsed after the internet came out, right? First through pirating, then through streaming. iTunes in the middle made economics worse, not better. And only now is the kind of economies of scale of streaming making up for that loss of revenue. So basically, artists, like if you look at a musician, their livelihood went from, I'm going to sign a good deal with Sony. I'm going to try to get promoted on MTV. I'm going to sell like 1 million records, and that would be an amazing outcome for me financially. To I can't make much money off Spotify unless I'm Ariana Grande. But generally, it's like just a trickle of revenue. So the only way I can make up for it is to tour incessantly, and that's brutal. So they what NFTs, like a very simple way to think about it is NFTs add a new monetization pathway, or just a new way for them to earn a living, to monetize their work, to generate revenue from their work. Because like I love music. I follow some, kind of not super mainstream artists, and I can tell they're not making much money. Like they're programming on the side. They're
Mm,
making music on the side. Their main job is a programmer or something else, right? Because they have 10,000 listeners on Spotify. That does not pay for a living. And one artist was moved. His album was so good that like I thought for the amount of list, I was afraid he was not going to make more because I felt like I was only the one of 6,000 people listening to his stuff. So one day I just said, "Dude, I love your stuff. Can I? Do you have a Patreon? Is there any?" I couldn't. I was trying to pay him, but he had no mechanism to receive. And
yeah,
in the
yeah.
end, he sent me his PayPal, and I sent him a lump sum, and I said I really appreciate it. But that's like me acting
That's
extremely
crazy,
aggressive,
isn't it?
right?
Yeah.
Me acting extremely aggressive out of the blue. That's not a dependable thing. So, okay, let's imagine you are a musician. Prior to NFTs, what is on your menu of call it revenue generation? What's on your menu is I will sell albums, which almost no one buys now because digital albums are not really just a big seller. I can get streams of Spotify. If you're not over, 1 million or whatever subs on Spotify, you're not making reasonable money. I can tour, but that's brutal, and it's like I have to do it over and over and over again. At the tour, I can sell merch. I can sell some T-shirts, and online I can sell some T-shirts. Basically, I can sell some T-shirts and vinyl. Right? It's like your monetization engine is some very poor unit economics from digital albums, uh, even worse with streaming on Spotify. Uh, Break your back and all your band members and go tour, and you have to just those are one-offs, and you want to run a web store with some $20 merch. Like it's not a good. That's why it's not a good livelihood. That's why they're all complaining, right? NFTs add
Yeah.
a complete new thing on the menu, which is Chris Dixon first wrote about this, but I feel so frustrated because I came up with the same idea, but I didn't write it out at the same before he published. So he gets full credit. But essentially, NFTs allow you to monetize at every price point versus your fans' level of enthusiasm and dedication. Let's say for every band member, let's say for every musician, there are 10 super fans in the world, right? These are by super fans. These are people who will just buy your stuff blind and will pay happily almost any price. So, like, if I'm patronizing this same musician and he had NFTs available, like let's say he had a one of one NFT priced at $10,000. Maybe it's like a unique track, maybe it's a poster, maybe it's like who knows what it is. But this is like his stuff for like if you really love my work, here's a $10,000 one of one at $250, I have 100 copies of something else. At $50, I have this really neat, like, I don't know, uh, cover art or something that anyone can get. And then, at $20, you can buy a bunch of stuff. Like, people who want to pay $20 now have a way, if maybe they don't want merch, like, nobody plays actually vinyl. They just put it in their, like, shelf, right? Now they can pay for that, and you can monetize for that, but they can they can sell a unit of a good that's $10,000 that they could never sell before, because they had nothing they could offer that would be $10,000 before, because they couldn't sell a physical thing for
Mm,
$10,000. Such a thing doesn't exist. And a digital thing couldn't be scarce, so it could never price that way. But now, if you can make it scarce, you can actually give really high end, call it, or customized offerings to your super fans. And that basically allows you to capture revenue along a curve. And all of a sudden, you can monetize you can, like, actually get fairly, not like even monetize, but actually get fair reflection of your work in terms of revenue backwards. Because now the people who want it, like me, who want to throw money at you, can actually throw money at you and get something back, and we both feel great about it. And the best part is, this whole
yeah.
system exists outside of the control of the existing power hierarchy. You do not need to pay labels. You do not need to pay, like, marketing dollars. Like, you can literally mint the stuff very cheaply online, on Rarible, and then you're completely in control of your own fate, right? And no one is, like, other than the NFT platforms, which take a very modest cut. You are not surrendering your economics and your distribution. You're actually taking all that back for the first time, and you have a direct relationship with your fans, through Instagram or Twitter, and that's, like, I think that is so good for creators and musicians.
That's the thing, and this value exchange is happening without just putting more stuff into the world, be it t-shirts, be it records, and all of that, and all of that thing. It's simplifying it so much.
Yeah,
Um,
and it's so much better to be a fan, because you can actually collect. All of a sudden, there's more stuff you can do and to engage with the musician. Because right now, it's just, I want to. There's I have greater desire to patronize them than they are able to serve with what they have, which is just t-shirts and mugs, right? Now they have something to give.
hmm. There was something I was listening to on another podcast recently, which I hope you might be able to help me understand. I think it's related to NFTs, and I think they was talking about property as an example. Obviously, like property prices in London, I'm sure New York, are just astronomical. It's becoming this thing which is almost impossible for the vast majority of people to ever to ever own. But I think this was kind of suggesting this technology, this framework, is what you're saying is actually could potentially democratize uh, assets like that. And essentially, well, you could now buy a very small part of something which you would never be able to afford the whole of. Am I understanding that in the right way?
Yeah, absolutely. Fractional ownership has been an idea for a long time, and people have done this prior to NFTs. Like, if you buy fine art and it's worth $10 million, not everyone, like, a few people can buy the whole thing, but certain people just want exposure to want to invest fractionally in that piece of art. This is, of course, taking out the utility. This is not like, you would never hang this because you're only owning a fraction of it. But yeah, companies have kind of set up, like, controlled structures to help fractional ownership. They basically run a fund, and you're buying shares of the fund. But now with NFTs, that's no longer a proprietary structure you have to set up with humans in the loop and management and paperwork. It just becomes entirely natural. So the Beeple painting that sold for $69 million, is kind of like, that's one single unit. But the same guys who bought the original Beeple one of ones that dropped on Nifty Gateway last year, and those were like a collection of, like, highly desirable early Beeple releases, and they actually had to pool a lot of money to buy the whole collection. What they did was they took that whole collection, they bundled it together, and they reissued it as a fractionalized token called a B20 token. So, like, individually, no normal civilian can afford any of those one of ones, but they pooled money together and bought all of them, and then basically reissued it as much smaller units of fractionalized shares. And then basically anyone
Right.
with
Okay.
Ethereum can buy the B20 tokens. Uh, the problem right now with this is if you fractionalize an asset and then issue it again under U.S. security laws, that becomes, I think, a security, and you basically have to you're now regulated, and you can't do that basically
Okay.
unless you do a bunch of work. So I think these guys did it out of Singapore. So now it's kind of this global landscape of competition to see whoever has the most facilitating kind of policies around this.
Okay, interesting. And I guess that maybe ties in the thought around regulation to the other kind of big theme you mentioned about DeFi. Um, I guess maybe in layman's terms to begin with, like what is DeFi? What should we be understanding DeFi to mean, and what's its significance?
Yeah, DeFi means decentralized finance, and let's just talk about what you can do with it, because that will make everything clear. With a bank, you can deposit money and it will give you interest, or you can give them some collateral and they will lend you money. That's like the core nuts and bolts business of a bank. DeFi is doing those two functions and more on a blockchain. So today, if you have just dollars, pounds, euros, how much interest can you get out of that at a bank?
Very. I mean, I get no interest on any money I have in my bank.
Yeah, exactly,
Yeah.
right? If you take those dollars, any currency, and you deposit into a DeFi savings account today, you can get 20% interest on flat national currency. Like the key thing here is you're not messing with Bitcoin, Ethereum. You're not making any speculation about prices of those things. This is using fiat currency. So what happens is for example, I'm in the US, I take $1,000 US dollars. I transfer it to Coinbase, still $1,000. Coinbase lets me buy this thing called a stable coin, which is a stabilized cryptocurrency pegged to a traditional currency. In this case, a stable coin of US dollars. Their preferred one is called USDC. So I take $1,000 and I convert it to 1,000 USDC. Still $1,000, no fees has happened. Now, once it's converted to USDC, what is a USDC? A USDC is a token on top of the Ethereum blockchain. It's an ERC20 token. The crypto protocols are now basically will take my USDC and offer interest rates on deposits of this money. So I can take the $1,000 in USDC, deposit in something like a Compound or Aave or Yearn. These are all like online blockchain-based banks, if you will. And today's rate is like anywhere between 7 to 20%. So call it 10%, just to be lazy, right? You can get 10% on top of just plain cash. Like, that's crazy.
That is crazy.
Like
That is crazy.
you did not require Bitcoin to go up. You did not require Ethereum to go up. You did not have to speculate on ICO. It's just straight cash into equivalent stablecoin, deposited away. Now, what's different about this versus like a term deposit? A, there's no term, so it's a complete like you can take it in, take it out anytime you would like. B, it's variable interest rate. Right now, it's 10%. Call it. At some point, it was very low. It was like 1%. At some point, it's 20%. So it's not a fixed APR term deposit. And C, of course, the risk profile is completely different, much higher. This is like most deposit accounts are federally insured. So, a bunch of gangsters go to the bank, steal all your money. You're not going to lose all your money. So it has very high security standards. If the bank fucks up, it's still going to make sure your money is yours. If you deposit stable coins into a smart contract, and for whatever reason it gets evaporated, some hacker, there's code bugs, any reason that things go south, it's gone. It's not. There's no number to call. There's no insurance agency. There are actually insurance agencies, but none of them are good. But the risk profile is significantly higher. So I was joking on Twitter. It's like these online crypto lending protocols. If you were to rate them as bonds, A, B, junk, like where would you even rate them as bonds? And I got all kinds of different answers. But generally, you should consider this as asset you may completely lose. But once again, crypto is putting something on the menu. Previously, even if you were risky in temperament, you had no way of getting more returns on your savings. But today, if you're pro-risk in temperament, you can take your $1,000, turn it to stable coins, deposit it on the online protocol, and if things go well, then you earn 10%, 20%. Like you can do that today.
That's so interesting. One of the other sort of use cases I was reading about recently was about the insurance industry and how sort of DeFi as a concept could radically change that. I always think of insurance like no one enjoys like buying an insurance policy on anything. You never feel like you're getting good value. If you ever actually do have to claim, it's probably going to take you hours of your time. It's probably going to take you weeks or months to get any money back. What do you see as the impact which sort of uh, decentralized sort of technologies will have on that industry?
I think it's a bit trickier with insurance because insurance has to deal with real world outcomes. And the second you have to deal with real world outcomes, it's not as verifiable. It's not like a digital piece of information you can just work with. The core thing that makes the whole blockchain system work is that the state, the inputs required are all digital inputs. So they're just like states on the blockchain. So they can effectively, you're just sending an API call and saying, what is the value of this? And you know, if the number is higher or lower, you just reflect the state. But with the insurance, you're literally like debating real world minutia, like was this car dented? Was there a hurricane? How much percentage of your roof was blown off? Like how much is the cost to repair that? Like there's too much real world like data. And the second there's once that happens, blockchains just lose value like precipitously because they can't verify any of this information. The whole essence of blockchain is to be trustless, and meaning that um, you don't need like humans in the loop to make it work. And insurance is a thing that requires really high kind of humans in the loop. But like another use case is the kind of counterpart to lending and getting an interest, which is just borrowing. Borrowing is another thing that you can do in certain cases with very little human in the loop. So, like let's say a certain person, done reasonably well, has a house, has a car, bought some crypto early, and it's worth call it 100K right now. Let's say this person has 100K in crypto, right? And let's say this person needs some lump sum cash for whatever reason. Maybe there's a medical expense. Maybe it wants to start a business, but I need call it $30,000 to start a business. Um, what is he supposed to do? He could sell his Bitcoin. He could just sell and then use the money to start it. But there are probably good reasons he doesn't want to. Maybe he really believes in crypto and thinks it's going to go up. Maybe selling it will incur large capital gains taxes, and maybe you don't want to pay your taxes. Like you don't want to realize those taxes. So previously, last time around, the only option was to sell your crypto to use your crypto. Now, DeFi, decentralized finance, has matured to the point where you can borrow against what you own. So if you have 100K in Bitcoin today, you can literally deposit that into a vault and borrow $30,000 out of that for 3 to 4% interest rate, and you can do this in like 5 minutes. And it's just incredible because now it is literally a machine that prints out. It's like there's literally no human on the other side. Imagine you borrowing $30,000 from a bank and what you have to go through. You go to the bank, you set up a time with a bank manager, you fill out a bunch of paperwork, and just imagine that. I did this with crypto recently using the oldest system in the book with MakerDAO. You literally send them an address with your crypto assets. In this case, I used Ethereum. It takes your Ethereum and locks it in a vault. Right? They basically imagine this cloud vault, and then it says, "Okay, we got your collateral. Yeah. How much cash do you want us to spit out at you?" And I pick a number, which is a fraction of what I put in, and bang, it's like, here's $3,000 in cash. It's once again stablecoin US. It's in this case it's a stablecoin called DAI, and then you transfer the DAI to Coinbase, and magically $3,000 appear in your banking account. And you did not sell your crypto at all. So you still have the same amount of crypto, but it's collateralized in a smart wallet, in a smart contract that no one controls except software. And now you have money to do whatever you want. Like, and you did the most magical part is that I did not have to provide any personal information, not even an email. Never mind social security number, address, credit history. I didn't even have to provide an email. It's it's that trustless and that smooth.
That's really interesting. And as you say, as the technology becomes more mainstream and more widely adopted, like there's really positive outcomes of that in terms of sort of like democratizing access to to lending. Um, yeah, James, I'm learning so much here, and I'm sure this is sort of hopefully opening some people's minds to the sort of power of these technologies. Um, but as always, we could speak forever. But I'm conscious of time, so I've just got three final questions to ask you.
Sure.
Firstly, what did you used to believe that you no longer believe in?
So many things. I think if you don't have a lot of answers to this one, you're not really updating your own mind quickly enough. I mean, I used to believe you have to understand something well before you invest in it. I don't believe in that anymore. I think it's almost better to kind of invest and then understand. Of course, when you do this, you should start with small amounts. I used to believe that the key to kind of solving the human condition, changing people's minds, was through sound, logical arguments and data. I totally don't believe in that now. I think people make up their decisions using their feelings first and then find a bunch of data to justify it. So I don't argue with people as much anymore. The first thing that I do now when I engage with people on points of disagreement, before I even decide to say anything back, the first question now I ask is this person capable? Is this person's mind programmable at this moment in time? And if the answer is no, I just, even if they say something completely nonsense like the earth is flat, I don't even engage with that conversation. But it's important to kind of, and I say moment in time because people kind of reach different stages of readiness. Someone who is completely kind of wrong on an issue and non-programmable on an issue may over time, due to a life event, become programmable. That is the point to engage with people. So it's like before you engage and argue with people, assess first whether they're programmable or not. If they're non-programmable, move on. You got better things to do with your life. So like, I don't know, those are the two things on top of mind.
That's super interesting. Um, Secondly, if this wasn't your mission, I guess trying to get people to embrace the positive potential of so much of this technology rather than um, do the nitpicking and the cynical nitpicking and skepticism, what would you be focusing your time and your brain power on?
I think I just have a complete separate track of my life, which is I just love food deeply, and for a very long time, it's probably I still feel like eventually I'll end up with a food business or something like that. So my first love is Neapolitan pizza, and I feel like
Yeah,
perfect retirement project would be just to run a precariously break even pizzeria business where it's just like the joy is just in making the pies one after the other and tending the oven. I feel like every time I've done that, it's just been the
nice.
most blissful Zen state, and I can see why people would choose that over any amount of money. I think that would be a that would be a great parallel thing to do, and hopefully I'll get to do that at some point.
Nice. Um, and finally, if you could recommend one book for members of the Journey Further book club to read, what would it be?
I for a longest time I didn't do fiction, and but I love I love truly compelling visions of how the future can evolve. So science fiction is always something that appealed to me, but I never found the traditional canon to be engaging for me personally. I tried reading and I've read some of the all the classics, Neuromancer, Snow Crash, and Foundation series. A lot of it didn't do much for me until I read the Three Body Problem series, trilogy officially, quadrilogy unofficially. But I would say the Three Body Problem trilogy is the most large scale and truly thought provoking science fiction ever done. And I think the premise is also just so like attractive because normally minor spoilers, but normally when we get an alien invasion story, it's like Independence Day. It's like, oh shit, they're already here. What do we do now? Let's just launch our jet fighters and hope for the best. With Three Body Problem,
Hmm.
we actually do long distance communication and accidentally reveal our positions. and then we see they come. Like they were like, oh, the humans are there. Let's go get their blue planet. And we have, I think, 200 years to respond. So the setup is we aliens are coming, but we have 200 years to prepare. What are you going to do? And that is so much more compelling
Okay.
and plausible as a scenario than the aliens are already here, in which case, we have no chance. So like how society on global scale across all the countries respond to a 200-year existential crisis, I think is just fabulous. It's a bit hard to get through the beginning, but like anyone who gets through the second book declares it to be like all-time favorite.
Wow. No, that sounds like a great recommendation. James, thank you so much for taking the time. I think that's packed full of insights, so many interesting thoughts there for people to take away. So, yes, thank you. Really appreciate it.
Thank you, Nathan. It's been great chatting to you. I'm so glad you're doing this.